Today I'm going to be going through the profits I made from May 2023 on my $200,000 My Forex Funds funded account. Before I get into the video, I just want to give a quick reminder. Don't forget to check out my free Telegram channel where you can follow my results month to month more closely and discover snippets of other educational bits along the way. The link for this is in my description and is always free to join. Okay, so for proof of payment from the account, you can see that I received an email from My Forex Funds on May the 27th saying that I'd qualified for $1,824 against my account and that the payout is being processed into my deal wallet. Now, because this is the second withdrawal made and the second profit split, if you like, the split in profits between My Forex Funds and myself changes. So the first time I withdrew, it was 75-25. This time it's 80-20, so I get to keep 80% of the profits. And then should I make a third withdrawal, which I'm planning to, the profit split will then be 85 and 15%, so I get to keep 85% of profits from my next withdrawal and going forward thereafter. So again, May was a slow month for me. I mainly had two trades, one on the 9th of May, which resulted in a loss, and then one that was a few days ago, well, last Friday now, on the 25th of May. And even then it wasn't a proper winner, but I'll go into it in more detail. I'm not operating on full risk in my live funded account. I just don't think there's the need for that added stress. I've done the hard part of passing the test. Now I can just focus on making profits without affecting my psychology too much. So I'll break down the first trade, starting with the 4-hour time frame. So as you can see, the 4-hour time frame was bullish with this breaker structure here. And we sort of ranged really since we wicked higher, but we were still in a ranging environment. And we came back down to a 4-hour demand that had been tested previously, which for some people means been tested and it fails to make a new high, it's going to break to the downside. But I found recently a lot of times where this isn't the case, so I thought I'd keep it there and look for longs from here. It's pro 4-hour trend and we have tapped the discount region, so longs for me do make sense if an opportunity presents itself. Then we move on to the 15-minute time frame, and this is a zoomed out version just to show we are bullish at this point, and we had quite large internal sort of break of structures. There wasn't enough of a pullback to suggest a full break of structure. So now on the zoomed in chart, this is my sort of outlook. So we saw a more recent 15-minute break of structure the day before, only an internal one of course. And during the London session, I saw that these Asian loads had been liquidated here. And then we saw a full body change of character to the upside, which in line with 4-hour pro trend and 15-minute discount region. I was happy to look for longs from here, but unfortunately we ended up profiting at about 1% peak. But I don't take anything out, I let it run. And then since hitting the peak of 1%, we got taken out for a 1% loss. Now moving on to the second trade, and this one was the winner that I had on last Friday. So we can see the 4-hour time frame is bearish now. This was the ranging environment I was touching on before, and then we broke to the downside, broke further to the downside, saw a little retracement, and then an internal breaker structure again to the downside. As you can see, we're in daily demand. I've noted this, and of course, because we have only recently generated this momentum to the downside, we're in heavily discounted price. So a counter long from here, should the opportunity present itself, I'll be looking to execute. Okay, so zoomed out version of the 15-minute time frame, you can see we've been bearish. We had a 15-minute breaker structure and then another one. This was the most recent one, and our swing trend was between these two highlighted dots. And on the morning of the Friday, which was actually the 26th of May, we got a pretty early internal breaker structure to the upside. This left some unmitigated demand, and I was looking for an entry here, but I actually didn't use this entry point quite as highlighted here, and I'll show you why once I move on to the zoomed in version of the 15-minute. Okay, so now you can see here where I entered. It was at about 8:05 in the morning, and this highlighted larger box here, you can see there's another little one inside. This was an hourly demand zone, and we had a little liquidity grab here on the 15-minute time frame, but the 1-hour demand zone hadn't quite been tapped into since the bullish action through the Asian session. So I thought to try and get a good entry point, we'll look for a 15-minute demand zone that had perhaps been interacted with previously, but was within the 1 hour demand zone that was unmitigated. Obviously that led to this candle here being the demand zone. As you can see, very pinpoint entry. This was my raw spread account, but with the funded account it would have been about half a pip higher to take into consideration the maximum spread that it may be at. And then we saw a bit of correction still, and then a nice bullish breakout where we grossed at 3.4%. Now this long drive to the downside was following news, so we saw a 15-minute bearish full body change of character coming off of the 0.5 region, and obviously it's pro 15 minute to be looking for sells in the market. So once I saw this, I anticipated a retracement into this unmitigated zone, which was this candle and a little bit lower. Once we reached about this area, I looked to close out the trade in profit, and as you can see, if I didn't do that, it would have been a loss. So it was a good call to make. And that pretty much sums up my May as a month. So across a pretty long period of time, only 2 trades isn't a lot, but obviously patience pays, and it definitely did this month, similarly to April. And my thoughts on this recent sort of lack of movement in the markets is probably because in April we had the Easter weekend and the bank holiday there, and then in May we've had 3 bank holidays in the UK, and I know for sure there's been a couple in the US as well. So, you know, a lot of time where bankers can take time off, and then obviously people who work for these large institutions that usually drive price in one direction or another, them being off takes the liquidity out of the market for a lot longer than usual. So it has been tough, but hopefully June will provide more opportunity, more profit, and a solid end to the second quarter of the year. If you enjoy this video, be sure to subscribe, as that is the best way to keep up with my content coming in the future. Also drop a like, as that really helps my video, and comment any questions or video ideas that you may want to see me create for your own benefit. Thanks for watching.